The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com, that's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Thank you for coming today. It's the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I'm here every Friday at 3 o'clock. And if you have any questions, the best way to reach me is to call 631-647-4694. And we are independent wholesalers of life insurance, disability, long-term care, annuities, and life settlements. And we are experts in these areas, and we have hundreds of agents across the country seeking our advice on what's the right carrier and what's the right product and how do we do the right thing. And we provide solutions. And the biggest difference in working with us and working with somebody else is we don't work for a career company who's going to push one product down your throat. We really find out what your needs are and give you the best solutions, whether it be a product or legal solution, whatever the best solutions are to help you achieve your goals. And that's the key, is we are solution providers, and that's why we have so many people reach out to us, including attorneys and accountants, all day long for different things, insurance related. I just got off the phone with somebody whose parents are receiving long-term care, and they have an assessment, and what do we do and how we do it. Our attorney had this gentleman call us, and we guide him through the process. And guiding people through claims is important in working with people that you know and trust. His parents are going through long-term care issues, and they're in assisted living in Florida, but he just called me, and mom's long-term care policy is paying for their rent, and dad's long-term care policy is paying for two aides that are there 12 hours a day each, two separate aides that need to take care of mom and dad. So they're doing great financially. They're completely have most of their expenses covered for their care because they did planning a long time ago and bought two very good long-term care policies he's just calling to see but you need that person to call whenever you're on claim or whenever people pass away and you want to find policies or know what the right thing to do is. So we get those calls all day long, and we're happy to get them and help people move along the way. But part of this is when you buy a financial product, make sure you buy it from somebody that you know and trust. Do not buy it online and just buy it randomly, because when you buy it randomly and then you run into a situation, who are you going to call? I'm going to tell you, calling insurance companies today is harder and harder as they're offloading to artificial intelligence and or service people that aren't in this country. They're offloading a lot of work to the Philippines and to India to do medical underwriting, to do policy service, and they may or may not know who you are or know the product or know what needs to be done. And hold times are forever. So you need somebody with a connection who can help you, and we do that all the time. Today I really want to talk about annuities. There's a lot of people looking for fixed investments and this and that, and they don't understand the value of fixed annuities and income annuities. There's really two different types. One is a payout annuity that can pay you for the rest of your life, by the way. So, when you get older and you look at, okay, how do I meet my daily expenses? How do I meet my monthly expenses? And you're not making a salary, take a portion of your assets and look at creating that income stream by buying an annuity. You can buy one that'll pay out for the rest of your life or for a certain amount of time, but that money is there every single month and it comes into your checking account. You don't have to think about it. Having a paycheck for the rest of your life is a big deal. As we get older and, we're retired or whatever, and that paycheck is not coming in, maybe we're getting Social Security in, which is our paycheck. But if you need an additional paycheck to cover your expenses, or because you just want it, that's what an immediate will do for you forever and ever and ever and ever. So this is something to consider. And that's what Social Security basically is. It's an annuity that'll pay you an income. So if you need additional income, that's why annuities were created. And you can do it with your qualified or IRA money, and there's a reason to do that. And you could do it with what we call non-qualified money, maybe your CD money, and create that income. And when you're using qualified money, one of the reasons you might want to do it, what I call IRA money or 401k money, that you want to take a portion and create that income, is because if you don't spend that retirement money in retirement, actually it puts you into a plan on spending that money. If you don't spend that money and you leave it to a beneficiary, you could harm that beneficiary from a tax basis and everything else. We've talked about this in the past, where the Secure Act 2.0 has really changed retirement planning tremendously. Because if you leave a large sum of money to a child, for instance, they have to pay it in a 10-year time period. And if that child, and we've had these recently, has any type of special needs, I don't care if the child's 50 years old and they can't earn an income, and they're receiving benefits from the government because they need it, because they can't work for whether it's a physical or mental impairment, and they never could, all of a sudden they'll be getting income, and they have to take it over 10 years, and they're kicked off all the government programs. Something to really consider. Or that money goes right to the government. It doesn't even go to them for their care. So if you're sitting with an annuity, a retirement account, or something else, and one of your children or one of your beneficiaries is receiving special needs, you really need to create a trust so that money doesn't go directly to that child. Very, very important. Or a spouse. You have to be very careful on how things are structured and how things go. But an immediate annuity handles a lot of issues. But today I want to talk more about fixed annuities and how they can benefit your portfolio or your safe money. People think that you put your money in a bank and it's safe. Well, there's two things that happen when you put your money in a bank. One, an annuity company, which is offered by an insurance company, will typically pay you a higher interest rate than a bank will, whether it be a CD or a money market. Typically, it's much higher. And the guarantees of safety are better. People don't realize it. FDIC insurance only covers a couple of $100,000. That's it. An annuity in the state of New York covers up to $500,000 in guarantees. So as far as safety, the annuity is safer. Not only is it safer, but that CD or money market or other fixed account you buy in the bank is subject to taxes every single year, not an annuity. An annuity, a fixed annuity, defers those taxes, and you only pay on the gain when you use the money. So you could defer your taxes for quite a long time, which when your taxes are deferred, that money stays in the annuity and compounds. So if you earned 5% on $100,000 in a fixed annuity, next year you're working with 105, and 5% of 105 may go to 111. I don't have my calculator in front of me, but the money compounds on 105,000 and keeps rolling. Your money's riding like it's in the pot. It's not being taxed, and then you have to reinvest it. It's riding every year because you don't have taxes coming out. Compound interest. That's how it works. So a fixed annuity is a great option in today's economy, and interest rates are fantastic. They're well above 4.5% near 5%, which a bank is not offering. So I urge you to consider immediate annuities, which pay you an income, and fixed annuities where you can have some growth without taxation and safety. More safe than anything out there. More safe than treasury bonds even at this point. More safe than a bank in my opinion. Okay? You're listening to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. If you need to reach me, 631-647-4694. Thank you. Welcome back to the Main Street Code for Financial Success. Before the break, we were talking about annuities, and at one time annuities were a bad word. I don't know why they got a bad word, because they were mostly a bad word because somebody said that variable annuities were tricky because they had fees in them, and why put fees in your retirement account and investments? There's a number of reasons why. I'm not going to talk about variable annuities today. I'm talking about fixed annuities and income annuities. So why do you want an income annuity? You want an annuity that can pay you an income for the rest of your life or for a certain time period to make sure your fixed expenses are covered, and or we use them quite a bit for retirement planning and legacy planning. So one of the ideas we have for what we call your qualified money is to create a spending plan for that qualified money, because it's so taxable to the next beneficiary. It becomes taxable in their bracket, whether your kids are making a lot of money and you'll put them in a higher tax bracket, or they're in special needs and you'll create a problem. And that could be your kids, your uncle, your spouse is still going to be the beneficiary automatically if you don't change it. And if you've changed jobs or you've gotten divorced or something, or you're now a widower, you have to change the beneficiary on all your retirement accounts. Very important. Your retirement accounts and your life insurance and your annuities all go by documentation. They don't go by will. They don't go by trust. They go by your documentation with the insurance company. Very important fact. Income annuities are great. Fixed annuities are fantastic. I mean, when you're getting rates close to 5%, or you can buy an index and you have that safety of principal that no other investment can do, you would think treasury yields would be safer. Well, the government was downgraded this year. And with all the pressures we have in the government, how safe are the treasuries down the road? I don't know. But these are all backed by New York State, up to $500,000. Your money is safe, and the interest rates are better, and the tax savings is great. And if you buy an immediate annuity, an income annuity, with what we call non-qualified funds, that's your CD money, your savings money, or anything that's not tied up in a retirement program, that money is very tax favors an income, because part of that money is non-tax, because part of it's considered your principal. They only charge you actually on the interest. And the older you are, the less tax it is, because most of it's principal. And the IRS already has these calculations and figures that says, okay, you're getting mostly principal back, so we may not tax you at all on that income, or we may tax you very little. So the older you are, the less tax. Very interesting way this thing works. So if you have any interest, please give us a call and we can explain it to you, maybe in better terms when you can see it on paper and see what your particular situation was. But we also use them from retirement and non-retirement plans to fund life insurance policies. So I can take something that's going to be taxed to my kids, but I still want them to have that benefit of that value of that annuity. I'll take the income, and with part of the income, maybe like 3 or 4% of that income, I'll buy an insurance policy that will replace it tax-free. So what would you rather have? Would you rather have $100,000 taxable or $100,000 tax-free? What would you rather leave to your children? $100,000 or $1 million taxable or $1 million tax-free? It's a big difference. You have estate tax, you have income tax, you have federal tax, you have state estate tax. You have all these taxes impending on your retirement accounts because you haven't been taxed for many, many years. So if you want to minimize them and really leave behind a great legacy, life insurance is the only way. And use some of that asset that maybe you're not using to fund the life insurance policy so that you can leave that asset to your children tax-free, and or you can leave it in a income favorable way to your children that will help them for generations or your grandchildren that you can't do by just leaving your retirement program. So that's where we use income annuities, and fixed annuities we use all the time. Another topic I wanted to delve into besides annuities is planning in itself. If you're like me and many people that, are, let's call them seniors at this point. I hate the word elders. I really do. I think when my brother hit 70, I said, "Oh, you're elderly now." I don't know what elderly means, but elderly to me meant old age. It's not old age, but technically, I guess I'm elderly. I'm a senior. But most of the focus for the last 40 years of my life has been on my children. I wanted them to succeed, and they've done fantastic. I have great children. And it's something that we're all focused on. We're focused on their careers. We're focused on their livelihood. We're making sure they got to college. We're making sure they did well. But now all of a sudden the dynamics change. Now I got to focus on myself. What are my wife and I going to do? Are we going to move into a different house? Are we going to, as we move towards retirement, what are our considerations? And do our children live nearby? Do our children live away? The main thing that we're going to be doing today, actually, is have a family meeting and discuss with our children, what are our plans? We're so busy talking about their plans. Now we got to think about our plans. How are we going to move forward? And we haven't thought about it because they've been all over the place. So this is something that you may want to consider when you're doing your retirement planning, or, as life changes. At some point, you have to think about your own plans and how are you planning to help them in the future and yourselves. How are you prepared to help yourselves, whether you're looking to move, whether you're looking to stay on? Let us help you with those questions, and let us help you decide, hey, this is what we want to do. So having that family meeting is very important. And to tell you the truth, we haven't had ours. Why? One child's here, one child's there. They're living their lives. They're working on their lives. We're working on our lives. You need to come to a head, because the worst time to have a family meeting is after something happens. All of a sudden, you're sick or injured, or someone passes away. Now what? What are we doing? Not just with our stuff and this and that and claims, but how are we going to move forward? How's it going to impact the lives if you need long-term care? If you can't perform activities of your daily life, are you going to call your child from wherever they are in their life and say, hey, you got to come home and help me? Well, maybe they have a child. Maybe they're married. Maybe they have a life. And maybe your child will do that. Maybe your child will change their plans and move to you. Is that what you want them to do? Does that put a burden on them that you really didn't want to do? And is there a way of preventing that? Yes. There are solutions that require planning. One of the solutions is to look at some sort of long-term care planning, whether it be legal long-term care planning or whether it be an insurance product. These are things you need to consider. And we do a lot of this planning because long-term care is so prevalent. They can keep us alive. I don't care if you have a heart condition, something else. They can keep you alive another 20 years. They do, and they every day. 15 years ago, that wasn't the case, but that's the case today. So there's more and more claims for long-term care because people are living longer as medical advancements continue to move forward. And they may be living longer and maybe not living in the best way that they would like to live their lives. So because of that, long-term care is very prevalent. And a lot of long-term care is not just bought on a single long-term care policy, because that's gotten a lot of discussion lately because long-term care policies have gotten very expensive and very limited in what you can buy. So the industry is actually combined it with life insurance in a lot of situations, or combined it with kind of an annuity, so that we have some solutions that we didn't have in the past. And that combined with legal helps you a great deal. But have that family meeting with your attorney and or with your children and your financial advisor or us. And if you don't have an attorney and you don't have anybody, give us a call. We'll help set you up to put you on the right path. Planning eliminates problems. Planning eliminates problems. So you need to plan, and let us help you do that. You've been listening to the Main Street Code for Financial Success. The best way to reach me is 631-647-4694, or visit me at themainstreetcode.com, and you can catch my past episodes on YouTube, on Spotify, or on my website, and we look forward to talking to you. Thank you. Have a great weekend.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.